Thank you for joining me. I'm Alex, and I would like to talk about Square today. So what Square does is POS systems. That stands for point of sale, but I just like saying POS. They obviously do a lot of other stuff, mainly Cash App and similar things. But they're well known for having the point of sale systems that do like credit card payments and all that stuff for small businesses like small stores, flea markets and stuff like that. Very easy to use, very easy to set up. They kind of revolutionized that business because the old systems were all very expensive and very big and very complicated. So obviously a market that was ripe for disrupting, and that's kind of what Square did. Current price $187.90, which gives them market cap of $85 billion. So definitely not a small company anymore. They're growing pretty quickly. Dividend is 0. Don't expect that to change, especially since they kinda sorta still are a fairly small company, or at least that's how they're acting. So they're definitely in growth mode, and I really don't think that they're going to start paying a dividend anytime soon. Revenue $4.7 billion, up pretty much 50%. Earnings $375 million, which means they multiplied their earnings by -10, which is amazing. If they did it again, they'd be losing $4 billion, so that's pretty good. So obviously earnings going in the right direction, and going in the right direction very quickly. So PE 264, forward PE 137, so they kind of sort of expect to be doubling their earnings in the following year, which ends in basically a month. Total assets $4.6 billion, total liabilities $2.8 billion, which gives them a total stockholders' equity of $1.7 billion, which is up $600 million from the previous year. So definitely a lot of things going right here, and I really like the balance sheet. So ratio of assets to liabilities is almost 2, which is kind of optimal. I would like it to be a little over 2, but not going to argue with this. So as far as risk factors go, Square is kind of the company that's disrupting things rather than getting disrupted. So as such, there really is no risk factor. It's hard to assign risk factors to the company that's doing the disrupting pretty much always. So obviously there could be other companies trying to disrupt the disruptor, which has happened before, but that's pretty rare, and I really wouldn't expect that here. Overall, obviously a PE of 264 is slightly high for my taste. I'm more of a value investor though. So for a dividend investor, there's obviously nothing here. For let's do value investors first, because that's pretty straightforward. PE is way too high. Balance sheet looks amazing. The growth is nice. So for a value investor, obviously this is not the company. For a growth investor, the growth of 50%-ish is amazing. We're talking revenue here, obviously, but earnings growth of, negative 1,000%. Also decent, I guess. Revenue growth, amazing. Market cap of already $85 billion is kind of a problem. So the PE does matter to growth investors, but with a continuing growth rate of 50%-ish, they'd be at a decent PE in a few more years, especially with the earnings growth of 100%, which is kind of what they're forecasting. So if they double their earnings 4 more times, then definitely good PE, and definitely good for even a value investor. So as such, I think that for a growth investor, this stock is very interesting, not just because of the POS systems, but mostly because of Cash App and what they're doing with crypto. So there's definitely a lot of interesting stuff going on, and they have pretty grand plans. So the opportunity for growth is definitely there. So if you can deal with the PE being, about 13 times higher than it should be, I think this is a pretty good stock to look into, especially right now. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.